Joining us now is Scott Bauer. He is CEO of Prosper Trading Academy. Scott, good to see you. Now, you say that headlines and Iran sanctions keep getting amended. So how is a person supposed to trade this?
Very carefully. I mean, I think you have to look at this and look at the range that crude is traded in. You know, we saw the big spike up, obviously, a couple weeks ago after the attacks, up to about that 60, but that had really gone above the range that we saw, about 58.5. To the downside, there's a range that's been to about 53.5 to 54. And I think that you know, someone that's going to trade that has to trade that range until we break out of it. Because, you know, like you just said, we get headlines almost daily, whether it's coming out of Iran, whether it's coming from inventories from the EIA or API that, you know, have a snap move in crude, yet we really haven't seen it break out of that range yet.
You know, barring any other geopolitical headline, and who knows what that might be, do you think that we will mostly likely see oil trade to the downside, Scott?
Yes, there are so many headwinds right now. You know, it's all about global demand, which obviously is coming down. You know, the concerns about growth, the concerns about tariff talk. So at this point, I don't get, like you said, I don't see how oil can trade higher barring any sort of geopolitical event.
I want to switch gears and talk Marathon, because two large shareholders of Marathon Petroleum, they're pressuring management not only to split the company into 3 units the way Elliott Management wants, they're also wanting the CEO to be replaced. Does this make sense to you? Is this the right move?
I mean, you look at the charts on Marathon and, you know, it's trading near its 2-year lows. It hasn't traded down this low since just about October of 2017. Many of the refiners are having issues. However, you know, this really seems to be stuck in place. Now, I look at what Elliott Management says, and, you know, obviously the breakup in a more macro sense could make a good deal for shareholders. I find it hard to believe, though, that they're saying that, you know, this could be an added $40 billion of value. I mean, you look at Marathon, the market cap is just under $10 billion right now. So, you know, I'm not so sure of that. However, the CEO should be on the hot seat for the performance of the company.
All right, let's talk a little Saudi Aramco. First, they're going public, then they're not going public. It looks like they've picked SMBC Nikko Securities as the first Japanese book runner for the IPO. We should mention that's according to Reuters. You say Aramco is hedging their bets globally here?
I do. You know, they have banks that they're working with in the U.S. They have banks that they're working with in Europe. And so now they're hedging themselves by getting, you know, the Asian area of the world involved as well. And I think that's really smart, because when it actually does become public, and again, we don't know when that's going to be, you don't know what the reaction is going to be globally. So this you know, makes things, let's call it, a little bit more even keeled for them, gives them more of an appetite or a less risky appetite globally. Now, are they doing this because there may be some thoughts that Saudi Aramco could get listed at the Tokyo Exchange? Maybe. I think that's a real long shot, as some are saying. I mean, it certainly seems more likely that it would get listed here in the States or you know, in Europe. But I think this is a good thing for them. I think it evens out the space for them.
Leaving open all the options. Scott Bauer, thanks so much.
That's right.